Hello, everyone. Welcome to Kudlow. I'm Larry Kudlow. So, the plunging stock market has finally dropped into, I think it's bear market territory, what they call a 20% full-fledged correction. This comes as no great surprise. We'll get the final tallies as the show goes on. But frankly, the market's been falling all year. And look, I take no pleasure from this. Over 100 million Americans are invested one way or another in various retirement accounts. The vast majority of these retirement savings investors are middle-income working folks. They're not rich. They don't own the bulk of the market wealth. But for them, their monthly reports from various financial planners or brokerage firms are important. They're very important. Now, for most of my career, I've argued that the best investment strategy is stocks for the long run. Professor Jeremy Siegel wrote the book on this, as did Professor Burton Malkiel. Jeremy from Penn, Malkiel from Princeton. And I think folks who followed their advice to buy on weakness and then hold for 40 or 50 years, I think those folks have done very well. Now, this current bear market correction is certainly not the end of the world. I mean, for those faint of heart, I'd recommend perhaps not opening your monthly statements when they come in, at least for a little while. For others, I suggest deep prayer and meditation. Look, we will get through this, I promise. But, there's no question in my mind that however temporary these Biden radical, progressive, big government socialist policies may be, they have been driving stocks down all year. Excessive federal spending, the war against fossil fuels, the Fed's money printing have all contributed mightily to a sharp rise of inflation and a closely linked upturn of market interest rates and a pronounced drop in the living standards of typical American families, where spiking inflation has completely undermined solid wage and price increases. I mean, real wages have fallen for 13 consecutive months, according to some metrics. And if you look under the hood of the major stock market averages, you see it even more clearly. For example, the S&P 500 retailing index down over 30% year-to-date, and if you tack on the producer price index increase of 11%, those consumer-related stocks are off over 40% this year in real terms. Similarly, the home builders index, which is now approaching a 50% loss in real terms, semiconductors nearly 40% drop, the consumer discretionary cyclicals off over 40%, Infotech off over 35%. I don't want to bore you with all these numbers, but I'm trying to explain, if you look under the hood of the major averages, key economic sensitive sectors have been in a deep bear market for quite some time, and they are all pointing toward recession. Now, they could be discounting inflationary recession as well. That would be the worst of all possible worlds. I mean, look at the 30-year mortgage rate at 5.5%. That thing has about doubled in the last year. 10-year Treasury notes just about doubled to 3%. The Federal Reserve's target rate, which is now hovering at just under 1% currently, that's a big nothingheimer, it could go as high as 3.5% by year end. That, according to sound money advocate Jim Bullard, who's president of the St. Louis Federal Reserve Bank. Now, unfortunately, the Fed fell under the spell of the woke Bidenomics: spend, borrow, print. And the Fed remained in denial of the inflation threat of these left-wing policies. And now they have to pay the piper as reality closes in around them. I'm going to say it again. The only way to stop inflation is by abandoning the progressive agenda. Stop the massive spending, stop the regulatory control over the economy, stop the radical climate policies that have produced less energy and higher gasoline prices and huge consumer angst. People in the Biden White House choose to ignore the stock market. Big mistake, at their own peril. The stock market is reflecting what the rest of the country is saying and thinking. I mean, the latest AP poll shows Biden approval at 39%. His disapproval, 60%. A CNN poll shows 86% are either concerned or scared about the country's direction, whereas 14% are either excited or optimistic? I'd really love to meet those excited crowd. No, just that was a joke. That was a joke. Anyway, this is all serious business. If I may summarize, the key point, whether it's the stock market or whether it's consumers or whether it's working families or whether it's well-heeled businesses, nobody has any confidence in the Biden administration. Virtually nobody. And you know what? Confidence matters a lot. A free market economy is built on confidence, but that confidence has to rest on the rule of law and limited government and sound money and minimal tax rates, and also the great American idea that as good as the country is today, it will be even better in the future. That's what Reagan taught me. The best is yet to come. But unfortunately, we've lost that thought for the moment. But folks, I will tell you this, trust me, we will get it back. Trust me on this. The cavalry is coming.